Welcome to Your Money with Leo Daprile. I'm Leo Daprile, and each week on AM 570, Dan Rivers and I will talk about anything and everything to do with your money. If you ever have questions, please feel free to call me at 330-533-6936, or you can email me at leo@gemyoung.com. Enjoy the show.
This episode of Your Money with Leo Daprile is sponsored by Grange Insurance.
This segment is brought to you by Gem Young Wealth Advisors. Leo Daprile is with us here. The Dow Jones Industrial Average slumped 7.25. I looked a minute ago, and it looks like the market opened up 100 on the Dow, and the S&P is up 11, so about 119 up. And are you feeling that that was it's hard to say, isn't it? I mean, this is COVID-related?
It is. It is COVID-related, and there's a lot of data that I think we really need to look at. And I think the whole COVID thing, we're going to find out it's going to be overblown. Mm-hmm. I look a lot of time. There's a website called Worldometer. If you've heard of it, looked at it.
I'm going to write it down. What is it called?
Worldometer.
Worldometer, okay.
So if you really want to get to the facts of what's going on coronavirus, not only through the world, but you can do it through the United States. In fact, Dan, here's one of the cases and points. New cases. I'll show you the graph so that you can see it.
Yeah. I mean, so what time am I looking at that spike there?
That's your January, February spike. Mm-hmm. And see how they're saying we're spiking now, but in the grand scheme of things, we're really not.
Yeah. I mean, what you're talking about is that the graph almost comes down to 0 or 1 or 2 or 3, and now it has spiked back up maybe to a 7, where it might have been 100.
That's correct.
Back in January. So
what's going on right now is it's a lot of fear reporting, in my opinion, mm-hmm. is because when they're saying cases are doubling, well, let's take Ohio. Ohio was averaging 300 cases, and then yesterday they came out with 600 cases. So if you're reporting that in a percentage perspective, that's a 100% increase.
Right.
But if you read deeper into the numbers, Ohio had a big number yesterday because they had errors in reporting over the last several weeks. So yesterday's 600 number was actually an aberration. It's not an accurate number.
Got it. So that number is a compilation of tests that are coming in over the past couple of weeks, and they finally get these, and they had been in the pipeline.
Right. And in many cases, this is the point. The point is, when we see a 20 or 30% spike in cases, we're seeing that being hundreds, not thousands. But we're looking at the percentage, and that's what happened yesterday, is it's creating a lot of alarmist, mm-hmm. where people are thinking this is going to start slowing down the economy.
Is this a worldwide graph that I'm looking at?
No, this is United States graph.
United States. So we're looking back here, December 2020, maybe January 2021, where it was the highest. And you might look at that as if you're going to use a scale of 1 to 100. If that being 100, we're probably down. We've been down to maybe 2 or 3.
That's correct.
Yeah, and now we're jumping back up to maybe 7, 8, or 9.
That's correct.
Yeah.
I was on a call last week with an analyst, and the number that he said to us was, if you've been vaccinated, even if you're getting COVID the second time, which is no different than getting the flu shot and getting a mild version of the flu. People aren't making that connection. But the survival rate is 99.9% for vaccinated people.
So yesterday there was some talk that during the Buck Sexton show that they were talking about that people were getting it even though they had been vaccinated. Not true, huh? Most of the people are surviving it.
They're getting it and surviving it. Just like I said, it's the same premise as the flu shot.
Yeah.
The flu shot does not prevent you from getting the flu. You just lessen it and it keeps you around, right?
Yeah.
So we're not applying that same practicality. But I think a lot of the alarmist sort of news that's going on is really what caused the market. And you know how markets are. They go based on confidence. We've talked about that before. And with the news and the way it's been presented. And if you really drill down to where the hot spots are, Dan, it's in the states with the lowest vaccination rates.
Yeah.
And how they're saying it's almost a pandemic of the unvaccinated. There's some truth to that. But remember, this vaccine's been out 7 months, and the people that are not vaccinated, that's their choice. And we have to respect that, even if it makes them sick. But you and I, who are vaccinated, shouldn't be worried about it.
Yeah. Yeah. So let's segue back into this American Airlines group here. The cruise operator Carnival, they were all down yesterday, right? And again, based on this fear.
And I think you're going to see, and the reason I'm bringing these numbers up today is I think the reaction to the market was an overreaction. But at the same time, I think this little correction we're starting to get in the market's actually healthy. Because we've been running too hot. Like if you've noticed, earnings season started last week, and a lot of companies are meeting or exceeding their earnings expectations, but the market's not really moving, which quite frankly is refreshing to me because the market, I think, is a little ahead of its skis right now. So I think when you put in there this little nick in the confidence, which is what yesterday was to me, you add in there that the market's not moving that much because remember, we're still solid numbers year to date, even taking into account yesterday. So if you've been fully invested through the year, number one, yesterday shouldn't spook you. And if you're someone like me saying, okay, yesterday added, in my opinion, a little rationality to the market and a little rationality to the pricing because the PE ratios are starting to align more to a sensible rhythm where they haven't been lately.
So the airlines and they are really sensitive to this kind of thing, aren't they? And the Carnival Cruises of the world, and some of the other ones that you're talking about, Marathon Oil down a little bit. What's all that about?
I'm calling these the trigger happy companies.
Okay.
All right. Because these are the companies that are very tourism dependent, if you will. You know, and everybody's thinking, oh my gosh, we're going into another pandemic. People aren't going to fly anymore. The cruises aren't going to be able to cruise, and people are going to stop driving cars. So we're going to get out of those stocks. I personally think it's going to create, if you're doing your due diligence correctly, that if this continues to go this way, there's going to be buying opportunities.
I've heard that term before. Tim is our first call. Tim, you're with Leo. Please go ahead.
Yes, good morning, Leo. And I know that yesterday was an overreaction due to the fear of the virus, but it was a great opportunity. I sell naked put options, and I just wondered, do you do that for your clients on a big down day?
Good afternoon, or good morning, Tim. Thanks for the question. Tim, I do not. I stay out of the options market because that's a very specialized market. And if you're in that market, I applaud you for it. That's a fast-moving market. We do use some options with some of our clients based on some of the risk levels they're looking to take. But, no, if you're an options player, yesterday created great opportunities for you.
It was great. I sold 7 contracts, and what I usually do is my favorite stock is Tesla. I do out-of-the-money puts at a $400 strike price for a 3-week expiration, and I usually sell 3 to 4 contracts a month, and it generates about $1,500. And if Tesla should ever go down to 400 or 450, I'd be more than willing to buy it and then turn around and sell covered calls on it, which is another great strategy. But
you're in a complicated business.
Actually, it's not that complicated. It's pretty basic. All you need is the capital to back up your trades.
Yeah. That'd be and understanding what you're doing. But Tim, anything else?
No, I just wanted to say a great show, and I think this fear of the virus, we're not going to shut down again, so I think that's an overblown fear. I don't know what's driving the narrative now, because I don't think it's that serious a problem. The virus is treatable, and I think we'll just have to hang in there and see what happens.
That's right, Tim. Stay in the game.
Yeah.
All righty.
Thank you. 729-9977 for Leo, 330-729-9977. Warren, you're on the line. Go ahead.
Oh, good morning, guys. I'll make this quick. You know, as a regular guy, I'm listening to people talk about inflation, and I'm hearing people saying that, okay, it's reminding them of 2008. Now, I'm sitting there thinking, to me, 2008 was a pretty good year. And a lot of people made money. I made money. And my question to you is there a parallel between now and 2008, and is it a good thing or a bad thing? And I'm going to hang up and listen, okay?
All right.
You got it. Well, Warren, I don't think this is like 2008. I think 2008 was a year of significant excesses, especially in the housing market, and that began the crumble in 2008. So there was some inflation pressure because of that euphoria. Right now, the inflation, in my opinion, has more to do with the lack of supply than it has to do with euphoria. And quite frankly, there's a ton of cash in the market, like we've talked about before. But like if you've noticed this morning, Warren, housing starts came out today, and they're even though they're up, the permits for new houses is down, which is reflecting people's resistance to the increase in lumber prices. So I think you're going to start seeing some consumer-driven moderation to that, because they're saying even though we have the money, things are getting to the point where they simply don't make sense. So I think that's where you're going to see inflation moderate over time, because people aren't going to just continue to accept increases in pricing. They're going to start to say, okay, that's enough. I don't need to have these things. I think the consumer behavior is quite different than it was in 2008. Again, there was more euphoria and optimism that was going to go on. 2008 scarred a lot of people, and they haven't forgotten what that felt like. So it still comes into their behaviors on how they buy and how they manage their money and how they save money.
Were you and I doing a show in 2008? I don't think so.
I don't think so.
I'm having a hard time calculating that was nearly 13 years ago.
It's crazy.
And when you think about 2008, I remember people saying, who's going to buy cars? We're never going to be able to afford cars anymore because nothing is selling. Everything is at a standstill. And it really gives you perspective on just how quickly the market can move. Right now, we're talking about a semiconductor shortage, and it's keeping people from getting automobiles. They can't supply the demand, can they? It's an amazing thing. All these car companies out there, and we just want more and more cars.
Well, and I think part of that is back, and then let's parallel that to 2008. Back in 2008, what they did is they just kept building and supplying and storing, and that's generally the textbook recession, when you've overbuilt and we're overly optimistic, and then you have to just get rid of all that excess, and you go into a recession because of that.
Remember in 2008, I remember them talking about the inventory was at the Lordstown plant at that time, and how they had parked all these cars and there was no delivery for them because the dealers didn't want them, couldn't take them.
That's right.
And now you have kind of a reverse of this. The cars are sitting there, but they're waiting computer chips.
Right. But
not at Lordstown, but at car plants.
But the core problem, or the core difference this time, is it's not like we have this wildly surging demand necessarily as much as we have. Everybody's been afraid to buy the supply.
Yeah.
Back 6 months ago. And now there's more products competing for that same chip. So the demand for the chip amongst products is increased more than it is necessarily the increase in desire for cars.
Yeah. Something I learned about the computer chips reading over the weekend, that one of the problems is that everything uses computer chips now. So you're not just competing for the automobile, but almost everything, and we don't control the means of production on that, do we?
Well, that's part of the reason for the chip shortage for cars is when the car manufacturers last year backed off their orders. So this shortage is self-inflicted. You know that, right? They cut back on the orders, and the chip companies, the game console manufacturers, started buying all the chips.
Yep.
Because everybody was buying game consoles. And then once the car companies wanted to get back into the game, again, we're in this just-in-time world where the chip companies weren't stocking anything. So once the car companies wanted back in the game, there was no supply to sell them.
So they've got over to the games, and they don't have them for the cars now.
That's right.
So just to kind of wrap up the segment that we're doing here today, we've got this fear of the Delta virus. The European stock market slid 2.3%. I think we are a little bit less than that, but about 2%. And you're saying a lot of this is fueled by fear, and you don't think that we are near the kind of calamity that we had last year with the return of the virus.
No, I do not think so at all. I think we're well on our way out of it. I think the people, again, like I said earlier, the people that are getting sick are the people that intentionally decided not to get the vaccine. Again, being an American, that's your prerogative.
Right.
Love it or hate it, that's your prerogative, right? So I don't think we start lumping that all into saying that's going to significantly slow down the economy, especially if you go back and look at the Worldometer data on deaths and everything else that goes with it. It's not nearly what it was before because of how much the people getting sick, quite frankly, overall are more healthy.
Well, I mean, it's good to hear some common sense put to this, because a lot of people hearing the news yesterday would have thought, well, look, the return of the virus, it's coming back here with this rebound effect that it had last fall, and we're well into the summer here, and this thing is coming. It's just fatal. This thing is coming our way.
Wait till we get to flu season, and you can't tell the difference.
Yeah.
Right?
Yeah.
And we're used to that with the flu, right? We're used to just
But your data says that the people that are getting this virus are the people that are unvaccinated.
Yes.
And that's the problem. And they're the people that are dying from it, too.
Right. And the preponderance of people that are vaccinated that are getting it are recovering.
Yeah. All right, very well. All right, a little bit about Leo's company here. Leo has a business that does business with individuals and families that need comprehensive risk management. I'm one of them. I love what he has done. Sit down. You'll have that fit meeting to find out if you are of the same mind. And you don't necessarily have to agree with everything you say, because one of the things that when you sit down with Leo, you're going to find out about your own goals. And sometimes you don't know those, do you? Until you sit down, put pen to paper, and find out what you really want to do. Some interesting things come out of those meetings. What's one of the more interesting things that can you recall any anecdotes?
Well, my joke is every time I have a client and I help them do the personal goal planning, and as you know, I put together this sheet through the years. It's called "What's Important to You," and the goal is most people come to me and all their goals are a 1, so it's almost calamity in their mind, because they don't know which one to attack first.
Okay.
So what we do is we just try to put a priority to it, concentrate, maybe start with the top 3 goals, but when you have spouses, they never do that. I always say with spouses, you're going to give me your top 3 and your negotiated 4th. So as we try to get our handle on what it is. I would say the most common one that people are apprehensive is just making sure they have enough income for retirement. But what's interesting about that is they don't know how to necessarily define it. What does it really mean? Emotionally, it's an emotional response to the question, but we do a lot of work to get down to, okay, what does that really mean? You know, does it mean you want to have enough money just to live? Do you want to have enough money to take the grandkids out for ice cream? Do you want to travel? What does all that cost? You know, so then there becomes a whole bunch of moving parts to get to that answer.
You want to have enough money just to get up in the morning and go for a walk.
That's right.
And that's inexpensive.
That's right.
So a lot of different ways that you get to it. What's your email address?
You can also email me at leo@gemyoung.com.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to afterhoursyoungstown.com.